From Washington, D.C., I'm Ron Nussle. Today we're going to talk about strategic right-sizing during and after the corona crisis. This is the first in a series of 3 webinars. We'll be having part 2 probably later on this week. I'm scheduling it for Thursday, and we'll be sending out email notices to those of you that participated in part 1. This is a webinar designed for CEOs, executives, and SME, small, mid-sized enterprise owners. And basically, this is a reflection. This is some process that I've been going through with a couple organizations around the world during this crisis. And I wanted to give back. And so in the spirit of the corona process, many companies are giving back. And so I'm giving back to some friends and peers of mine, and so we're not charging for these webinars. So before we get started, I wanted to just go through a quick little disclaimer. Normally when we do consulting engagements, we have an accountability to deliver specific deliverables, but in this case, this is an information session, and so I want to be clear that we're here just to share some best practices. The best practices we're going to talk about are being used and talked about in multiple places around the globe right now. But of course, you should execute your own judgment. So this is not intended to be financial advice or anything like that. So you should seek professional counsel as you're moving forward in these very, very turbulent times. So most of you know who I am. I've got a number of people that I've worked with in the past that I send out invitations to start this process out. But just in terms of a background, some of you don't know. My educational background, I went to the U.S. Air Force Academy and a number of other schools. Mechanical and aerospace engineer by training. I was also a Division I track and field athlete. And I've maintained my competitive spirit in business because business is competition. One of my mentors said to me that business is not company to company, but it's actually supply chain to supply chain in competition with each other. So we'll talk about that a little bit today. Spent 15 years at Honeywell. And there I was a aerospace engineer, then a manufacturing engineer, and ultimately managed all of operations for $1 billion business. Moved on to Cessna Aircraft Company. I was a senior director of supply chain and outsourcing. I then spent 10 years in Silicon Valley, first at Lam Research as their chief supply chain executive. Worked for a couple other companies, EVP of operations, chief operating officer. And like everybody else in Silicon Valley, eventually you kind of get the bug. You want to go try a startup out. And so I worked for a couple of startups as, again, VP of Operations, Chief Operating Officer. I wrote the book Integrated Cost Reduction and then founded the ICR group after the book was written. And essentially, since the very beginning, we focused on 3 verticals: aerospace and defense, semiconductor, high tech, and then AEC and construction most recently. We really do 3 things. Transformation is really, I'll talk to you about in just a moment, is really what this is about. And this is a time of transformation. You know, this is a unprecedented time in human history, not just in our lifetimes, but in human history. And so transformation principles apply, change management principles apply during this situation as well. Focusing on lean supply chain, integrated cost reduction, and outsourcing. And the way we deliver the solutions is through training, consulting, and as interim C-level executives, and now through webinars. I've been a board of directors member of 2 companies, so I've been on both sides, both the management side as well as on the board side, and a member of the audit committee, compensation committee. So this has given me an experience basis for understanding a lot of different aspects of business. But if you think about this, and I picked my background because obviously that's what I'm the most familiar with, but really transformation, change agent. First off, my first experience as a real change agent was at Honeywell, where I was a founding member of the first ever aerospace and defense industry corporate-wide supply chain program. And at the time, this was in early 1990s, there were no templates. And a lot of the software companies were not even invented yet, that are now doing this thing on a daily basis. If you look at the consulting practices, they weren't even talking about supply chain. So we didn't have any templates. Really, there was a group of us, we'd meet together, we'd brainstorm, we'd put together processes and try to find a way forward in this pretty uncharted territory. And that's where we are today. And so some of the things that we learned at that time as a change agent are still relevant. These foundational principles of change management apply in today's turbulent time of Corona. Later on at Honeywell, again, I led operations for the largest and most financially successful new engine development program in 30 years. And again, this was a brand new clean sheet of paper. We were doing this in a modular fashion with partners overseas, and it had never been done before. So change management, transformation. When I moved to Cessna, I was the youngest director in their 72-year history. We started the strategic sourcing program, and what I neglected to talk about up at Honeywell in 1997, we were voted the #1 supply chain program in the entire country by Purchasing Magazine, which was the preeminent publication in the supply chain field. We won it again 6 years later at Cessna. So following proven processes, change management, and we also did, for the first time ever in the company's history, we did modular design and manufacturing, which had never been tried before in the business aviation field. And so once again, we had challenges that we had to deal with. So so from a executive standpoint, we spent a number of years doing a number of different things that involve change management. Interested in time, I'm going to move on and just talk about real briefly these three areas: aerospace and defense, AC construction, and high tech and industrial. So you can see some of the brand name companies that we've worked with, and trying to implement these changes has been a challenge. And so what I want to talk to you about today is change management and transformation in uncharted territory. So in the area of Corona, there's a statement that I've heard a number of times. I've read this in publications. I've seen this from some of the executives that we're working with in different parts of the world right now, and I've heard them say this: I can't wait for us to return to normal after the coronavirus is over. So the question that I have for you, is this true or is this false? So the answer is this false. We're not going to be returning to normal because we have had multi-pronged systemic shocks that have occurred during the Corona crisis that will lead us to another new normal. You know, after the 2008 crash, economists talked about a new normal. We're now seeing reverberations from the Corona crisis that will take months or even years to subside. And some of them will not subside at all, and we'll be in another new normal. So what I'm going to talk about next are 6 reverberations taken from some of the world's most respected business papers, and then I'm going to talk about 7 solutions. So the 6 reverberations: the Corona market correction, global trade relations realignment, the global oil war, global supply chain de-risking and nationalization, virtual work is now center stage, and finally, what many people are not talking about yet, which is the renewable sector. So first off, the Corona market correction. The Corona correction has dropped farther and faster than any correction since 1929. If you look at the graph here from Dow Jones, it shows 2008, 2009, the volatility each day, and you can see that the 2008 correction was 43%, but that was 226 trading days, almost a full year. The Corona correction occurred in only 27 days, from a 3.5% up to minus 35% down, so a net correction of 38% in only 27 days. This is unprecedented. Changing global trade relations. According to The Economist magazine, the relations between America and China are nearing their darkest point since the Tiananmen Square protests in 1989. China's mass expulsion of American journalists is an alarming escalation. And it's interesting because 2 months before, there was actually an armistice declared between this trade war. In January, both sides declared that they had reached a deal. And in only 2 months, again, according to The Economist magazine, we're at the lowest point we've been at in decades. This will not just suddenly go away. There will be reverberations from this for years to come. I don't know who planned this one out, but right in the middle of the Corona crisis, Saudi Arabia and Russia rather, decided to go into an oil war with each other. And you can see the plot from Bloomberg say the 2 largest drops in the oil price in history occurred in the month of March. And according to Bloomberg, even if demand recovers to normal levels by the middle of this year, 2020 will be on a record to be the largest decline in oil consumption since records began in the 1960s. Many believe that the reason for this oil war is to slow down growing U.S. oil exports, which have now, over the last 10 years, been decreasing year by year. And you can see in the lower right, to the point where just a few months ago, we crossed the curve and actually became a net oil exporter. We've all seen these pictures of the empty shelves. You know, as a supply chain professional, I never would have predicted, and I don't think anybody else did, that toilet paper would be the first thing that we would all run out of. But it did. But there's been many other things now. And so now all of a sudden, the word supply chain, which I've never heard in the mainstream media, I now hear all the time. So now people are talking about doing risk assessment and shortages in multiple areas, and lead times are stretching out. And so companies and countries are now looking at taking a more nationalistic tone and repatriating some of these supply chains for critical technologies like pharma, food, energy, aerospace and defense, and high tech. Virtual work has moved center stage. You know, I've been doing WebExes and GoToMeetings, teleconferences for about 20 years now, and it's always been a fringe thing done by a small percentage of the population. But now all of a sudden, everybody, governments and banks and all over the world, people are doing these virtual work meetings, just like this conference. And this is going to continue because now we've broken through a resistance point, as they talk about in the stock market. There's a resistance. Once you break through that resistance, then the stock suddenly takes off. So we've broken through a resistance point. And I believe many companies are now going to look at this and talk about what does this mean in terms of fixed assets, capital, buildings, expansion. Do they need all that extra space, or can they allow a percentage of their workforce to work remotely, which would have never been acceptable before, but now it is. Finally, the renewable sector. The renewable sector is now on the verge of becoming high risk and may in fact be high risk, according to Financial Times of London. The oil shock threatens the financial model of many renewables companies. I worked for a solar company as a startup for about 1.5 years, and I know about grid parity. And basically, the solar business model or the alternative energy business model is tied to grid parity. Well, when energy drops by 50% and then consumption drops by 40 or 50%, it changes the entire dynamic. The carbon credit cost and the financial incentives are not going to be there. So this is going to put the renewable sector in a struggling footing for liquidity. So the bottom line is, the word of the day is liquidity. When you're going through a crisis like this, how do you manage and maintain your liquidity? So I'm going to talk about 6 strategies to implement now to stabilize your liquidity. So the first goal is to strategically right-size company, products, and projects. We're going to run multiple scenarios. People have talked about now a V, a U, or an L recovery. I'll cover that in a subsequent webinar. You need to stay visible to your team. You know, I'm here in Washington, D.C., and never in my lifetime have I ever seen a president and a vice president in the United States every single day standing in front of the American people talking. You as an executive need to be doing the same thing. You can't go hide and do a bunker somewhere and put together a strategic plan or strategic right-sizing plan and not include your team. You have to communicate consistently more than ever before to keep them on board. You need to make changes during the crisis. Many people talk about an Agile Scrum process. If you're not familiar with that, I'll cover that in a subsequent webinar. But basically, you're not going to do a 2-year, ERP implementation or build a new factory, but you can do 1 week or even 24-hour rapid cycles of change. And so we'll talk about some of those. And we're working with some of the companies overseas and here in America on this process right now. De-risking the supply chain, identifying critical network nodes, and localizing critical commodities, looking for new growth. There will be many new growth opportunities coming out of this crisis. There always are, whether it's in infectious disease or in new hospital construction or in virtual work or in supply chain. And in virtual work, this is the thing that, since we've broken through this resistance, that we should continue after the crisis is over. So we'll be discussing number 2 through 7 in a subsequent webinar, but today just number 1. So first off, right-sizing versus downsizing. You know, I've been through 3 different economic downturns in my 30-year history or career, and mostly they're downsizing. focusing on labor costs, only cutting headcount, across the board cuts in office supplies, travel, capital expenditures, equal pain for all. Essential business capabilities are lost. And the bottom line is that at the end of this downsizing process, the company is ill prepared when the recovery happens. We're going to have a recovery. I believe it's going to be sooner than many people think. And the reality is, if you've cut so deep into the muscle and into the bone, these essential business capabilities won't be there when the economy recovers and when your business has the opportunity to grow again. So what's right sizing? It's different than that. It's about focusing on lower portfolio total cost instead of just labor cost. Instead of cutting headcount, you want to redeploy headcount based on strategic needs. Some projects or products, you want to add headcount or add design resources for moving from one product or project to another. Surgical cuts only where needed. Focused actions only where needed. And you don't want to lose essential business capabilities. You want to identify core versus non-core capabilities. We'll explain that in a subsequent webinar, how you go about doing that so you can strengthen the core so that you are prepared to be able to take advantage when the upturn comes and your strategic products and projects are preserved and your core resources are ready for future growth. So I want to walk you through a 4-step methodology, how to do strategic right sizing today. And again, we're going through this with a couple organizations around the world. First one, plotting cash flow and gross margin for projects and products on a strategic right sizing matrix. Calculate cash flow or burn rate for 3 possible Corona scenarios, a V, a U, or an L. I'll talk about that in the next webinar. Based on the strategic right sizing matrix of 1, 2, 3, or 4, you're going to take specific actions. The next slide will show you those. And finally, after you've done this, then you need to look at a core competency assessment of your head office and your SG&A functions. What are the things that are critical? And what are the things that can enable you to have a different footprint or do some outsourcing of some of those processes? But you want to keep your brain intact during the initial process. So if you look at a 2x2 matrix, this is a strategic right sizing matrix that we've put together. And on the x-axis, you want to have net cash flow. You want to do this by product or by project. In this example, this is a project-based accounting, so this would be like a construction company. And on the y-axis, you have return, gross margin, again, on a product or project basis. Many companies' financials are not set up this way. Their cash flow is aggregated together across the board. And so this prevents them from really looking at each project or product individually. So you might have to look at it by product line. But the bottom line is you have to look at them individually. And you want to assess their risk versus their reward. So obviously high cash flow is low risk. Low cash flow is high risk. And then we're going to lay a 2x2 matrix on this, and we're going to put 4 different quadrants. We're going to talk about quadrant 1, quadrant 2, quadrant 3, or quadrant 4. Quadrant 1, low risk, high return. Quadrant 2, low risk, low return. Quadrant 3, high risk and potential high return. This is a question mark about, is this really a high return project? We'll talk about this on the next slide. And then high risk and low return. So we're going to make specific decisions based on these 4 quadrants. And that's really the point of strategic right sizing, making these strategic decisions. So quadrant 1, these are critical to our core business. These are the foundation of the future. You want to accelerate this project in design and use those scarce resources during this time to be ready for the future. Quadrant 2, let's call these self-sufficient projects. Really, you want to monitor and incentivize the project manager or the general manager of this business, because it's not necessarily a risky project because it's generating cash, but it's not necessarily generating the kind of returns that you'd like. So you'd like the general manager or project manager to look for labor savings or look for supply chain savings to increase the gross margin. We'd like to move these quadrant 2 up to quadrant 1. Quadrant 3, this is the biggest challenge on this chart. These are what I'm calling reality checks. These are high risk because today, these projects are not generating cash, but they're generating good margin, or you think they'll generate good margin. We maybe think this is like hope springs eternal, that these are going to someday blossom into winning projects, but today they're consuming our cash. And in this environment, it's about cash preservation. So you need to do an assessment or a deep dive of these projects. You're probably going to have to slow down the purchase orders, maybe reduce the labor, And you want to move your top-rated staff here. You want to give some of your team an opportunity to grow to the next level as future general managers or future C-levels. And if you move them here to these tough projects, don't put them on the easy projects, put them here. Let them prove themselves and let them see if they can help move these projects into a lower risk position. And finally, quadrant 4. These are tough times. You're going to have to make some tough decisions. These are the things that you really cannot afford to continue during and after this downturn. And so you're probably going to have to shut some of these down, cancel the purchase orders, release the labor, and maybe move it to some of these other quadrants, and then sell or transfer inventory. So nobody wants to go through these tough decisions, but during this challenging environment, you're going to have to look at these things with a very, very clear set of eyes about what really quadrant each of these projects or products are in. So really, that's about the end of our discussion today. We talked about strategic right sizing. In the next webinar, I'm going to talk about running multiple scenarios. I'm going to explain a V, a U, and an L. We're going to talk about staying visible to your team. We're going to talk about Agile Scrums. And we'll talk about localizing and doing a network assessment of your supply chain, risk analysis, new growth opportunities, and then virtual work. So thanks for joining us. We'll be sending out an email after this webinar to all of you, and we'll also be inviting you to session number 2 or webinar number 2. I thank you for joining us, and we look forward to seeing you at the next time.